opinions. They have programming. Question everything.
Hey guys and gals, here we go. So today we're going to talk about credit scores. Um there's so many myths about credit scores and what do you need in terms of like what's the best credit score to buy a home, to buy a car, to do anything pretty much. And um, can you do anything without an actual credit score, right? So hopefully we'll uh, answer your questions, relieve some of the myths about credit scores, and at the end of this, you should understand basically everything and share this. So I'm sure there's people out there that constantly look at their credit scores and monitor them and not really sure where they should be because maybe they get confused messages. So here we go. So the title to this episode is basically the truth nobody tells you about your credit scores rather, and that's basically, most people, they think they understand credit scores. Pay your bills on time. Don't max out your credit cards. Keep your scores high. Sounds simple, right? Um, but what if I told you that some of the most common beliefs about credit scores are completely wrong? What if I told you that people with excellent credit scores still get denied loans, and people with average credit scores sometimes get approved for millions of dollars in financing? So today we're exposing the truth nobody really tells you about credit scores. So welcome to Reaction Gap. And hopefully you question everything, right? That's our motto. So, the biggest credit score lie. Let's start with the biggest myth. Most people believe their credit scores determine whether they get approved. Um, your credit score is only one piece of the puzzle, actually. I've spent nearly over 30 years in consumer credit, mortgage lending, um, and I've seen credit bars with 800 scores where they could get declined. I've also seen bars with low 600 scores buy homes because lenders don't lend to a number, they lend to a complete financial picture: income, assets, debt, employment, credit history, stability. The score is simply a shortcut. So, what actually makes up your credit score? Um, what actually affects your credit score? Most people think it's all about paying on time. Uh, Payment history is important, of course, but that's only part of the equation. So here's what matters most. Like the number one is basically payment history. Number two, this is where most people get hurt. Imagine you have a $10,000 credit card, like a limit. And if you're carrying $8,000 balance on that card, your score could drop significantly, even if you've never missed a payment. You make your payments on time. Why? Because lenders see the high utilization risk. It's a risk. So then, length of credit history, new credit increase, uh, credit mix, mortgages, auto loans, credit cards, personal loans. The system wants to see experience managing different types of debt. Okay. So, myth one: checking your credit score hurts your score. False, but we could talk more about that. Checking your own credit report is considered a soft inquiry. It does not lower your credit score. Myth two: you should close old credit cards. This one actually hurts people all the time. Someone pays off a credit card, closes it, they think they're being responsible, but they're not managing it anymore. And then there's score drops because they reduce the available credit and shorten their average credit history. So, another myth, you need zero debt to have great credit. Definitely another myth. The credit system isn't designed to reward people who never use credit. It's designed to reward people who actually manage their credit responsibly. There's a difference. And what score do you really need? So, chasing a credit score that's an 850 score is mostly, I guess, an ego, an exercise. Once you're in the excellent range, the benefits start to level off. The difference between 790 and 850 is often far less important than people think. Okay? So focus on consistency, low balances, on time payments, very important, stable finances, long term habits. That's what builds wealth and builds good credit. So here's the real lesson. Most people react emotionally to their credit score. They panic when it drops, they celebrate it when it rises, but very few people understand what the score is actually measuring. The space between what people think is happening and what's actually happening. The people who win financially aren't people with perfect scores. They're the people who understand how it works, how the game works. So if you think you learned something today, hit the like button, subscribe, share the episode with someone who's trying to improve their credit. Leave a comment below if you'd like me to dwell more into this. And what is the biggest credit score myth you've ever heard? But until next time, question everything. Always. Thank you for your time and hope to see you soon. Bye-bye.